stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reineck, and this week I'm going solo again to talk about top ranked stocks. Top Zacks Rank stocks, number ones, the strong buys, but that also have style scores of the top ranking, which is A, the total VGM, which is value, growth, and momentum. It's a composite of the three. That also has to be an A. What are these very rare stocks? I did a screen to find out because with everything going on right now during this earnings season, I wanted to get some companies that were at the top of their class. Basically, the earnings estimates are rising and everything else looks good, including a good valuation to get that A style score rating as well. And it's not always easy to find these types of stocks. You think that it would be, but everything that would be a Zacks number one ranked strong buy on the earnings side and that maybe has the growth wouldn't have the value necessarily. So these are kind of rare stocks that seemingly have a combination of all three things, the value, growth, and the momentum, plus the rising earnings estimates. They're kind of unicornish. And I was intrigued by the list of stocks that this screen brought up. So I did do the screen for this. This is Zacks number one ranks plus the top A style score, VGM score. And I did get 17 stocks when I ran this screen. So that's a little more than I was thinking, but you should not be surprised to hear that 4 of the 17 were gold miners. And that's because those earnings are rising as the price of gold is hitting new records, and they are going to see record earnings. The stocks are still cheap on the gold miners, even though they've taken off. Many of them are trading at 5-year highs. So that's the momentum. And then we do have the growth component because of the record gold prices, and that earnings growth is there. Plus the sales growth is also going to be there as long as they're getting it out of the ground. But I didn't want to focus this whole podcast on the gold miners because I have done standalone podcasts on them several times already this year. I'll keep some of that for later on this year as we head into 2026. I'll do another check-in, but I did pick out 3 other stocks that were a little intriguing on this list. One of them, I believe you've heard of. The other 2 are small cap companies. And so that's also intriguing. Maybe we should be looking to the small caps for some of these hidden gems. So without further ado, let's dive right in on 3 of these stocks. And then I am going to just briefly show the chart for one of the gold miners at the very end. So let's start with a small cap stock that is on the drug side of things. So it's Indivior. I hope I'm pronouncing that right. You know me in names. Indivior. Ticker is IN as in Nancy, I as just IN, D as in David, V as in Victor, INDV. They have a market cap of about $4 billion. So I am still calling them a small cap. They are now included in the U.S. small cap index and the total market index. I believe they were a foreign company for many years, but now they're in Richmond, Virginia. They did report earnings already on October 30th, where they raised full year guidance. So that's good. They do have, they are on the drug side, and they do have a viable drug out there, Sublocade. And that drug is expected to make it was expected to make $765 million to $785 million for full year 2025. But that's what they raised in this last earnings report to $825 to $845. Gross margins fell a bit in the quarter down to 73%. Non-GAAP, however, was 84%. And for gross margins, that's down from 79% last year. And And so the company is trying to cut some of their costs to get that more in line. They did do some employee reductions, but they're expecting to save on costs about $150 million in 2026. So they're really launching a national direct consumer campaign on sublocades because this is medicine to treat opioid use disorder. And the campaign is just called Move Forward in Recovery. So I kind of like these drug stocks where I don't really know what's going on because I'm not really following them. And then they do have a viable drug. They start to get earnings and the revenue starts to come in. And so that's when it's not really too late to get in. The whole thing with, biotechs and the drug research type of companies is that you have to get in before they launch it. And that's where the real money is made. Well, that is great if you know how to do that. And maybe you get lucky in a company that passes all three phases of the trials. But usually after a company does get some kind of approval, and then they have to go through the whole process of rolling the product out to the marketplace, is still really early innings. So I'm okay with getting into drug companies in really early innings. And I'm going to scroll down on Zacks.com. Well, wait a minute. Let's start up at the top. Obviously, this is Zacks #1 rank and the AVGM score. But you can see it has a C now for value, the B for growth, and the A on the style scores is in the momentum. It's still giving us an overall score of A, however. So that's what we screened for. So maybe it's not as cheap as I thought. But scrolling down now to look at the chart, you can see the huge run it's had. And it is busting out to new all-time highs here in 2025. It's up 154% year to date. But also look at the earnings. They are up and to the right. Things are happening because they have rolled out this product. And this is what you see often with these drug makers is that if they get the good news, then the analysts have to adjust kind of quickly. It's expected to see 30% earnings growth this year and then another 20% next year. It's got a forward P of just 14.4. So I am kind of surprised that it's cheap or it's only a C on the value scores because 14.4 would put it at a classic value. Let's look at the financial overview to kind of see what else is going on the financial side. I see some NAs because this is more of a recent thing, so we don't have the data in now that they've rolled out this product. So maybe that's what's also contributing to the C because we don't have a price to sales or price to book or the PEG ratio yet. So that is all still to come, and that's what I mean by early innings with this one. They do have cash on hand. Cash was $473 million, up from $347 million. So that's a gain of $125 million in just the last year. And I do like to see that. I like to see some of these companies that are rolling out new products on the drug side with a lot of cash because it's very expensive to run national ad campaigns, hire a sales force, do all these things to get your product to the market. And so a lot of these companies, spend a lot of cash at this point of where they are. But again, they are cutting expenses, trying to get that part down now that they have launched something. So I'm going to keep an eye on this one. If you like the drug stocks, definitely keep it on your short list. It does have the Zacks #1 rank. Let's just take a quick look and see what it's doing with the detailed earnings because it did just have those earnings estimates. We do have a decent number of earnings estimates. We've got 3 that are up in the last 7 days for both this year and next year. So the analysts like what they're seeing and quite a jump here, $2.16 from $1.72. And the next quarter also substantially higher. Let's just see what they beat by. Big beat here, big beats all across for the last 3 quarters. And that's what you like to see as well. So they're cutting those costs. I like that. And we're continue to roll out this product. So the stock is not that cheap here on a PE basis. Keep it on your list. It's got top Zacks Rank, number one strong buy, and it's got A for the style score. So this is Indivior. I can't say it again. Indivior. INDV. INDV is the ticker for this one. Okay, let's move on to something a little easier for me to pronounce. And this is one you all should know of. It's been around forever. The Travelers Companies. Yes, it's insurance. And people like to say, insurance is boring. Why would I be in insurance? Except Warren Buffett has made himself one of the world's richest man by buying insurance because everybody needs it. And it can, in the right conditions, have great margins and really generates a lot of cash. These are the things that Warren Buffett likes about it. So the Travelers Company, ticker TRV. I don't think I've covered this one in years because of, frankly, the boring factor, right? But it now has a Zacks number one rank and the A for style scores in the VGM. And just looking at it on Zacks.com, we can see it's an A for value, a B for growth, and then we have the A for momentum. So the overall style scores are even better than what we just saw with the drug company. This is a big cap company, 59 billion in market cap. It's trading near its highs. It's only pulled back a little bit in recent weeks, but it was at a 5-year high. So this, while we think it's boring, kind of just does its thing and maybe isn't as boring as we think. Also shareholder friendly, buying back shares, also pays a dividend. It's yielding only 1.6% right now, $4.40 a share, but combined with the share buybacks, they're quite generous and shareholder friendly. Now, it is cheap. That's why it's got that A on the style scores for value. PE of just 10.8. But yet it's got double-digit earnings growth expected this year of 14.6%, and then a little bit of a cool down for next year at 5.9. Year to date, the shares are up a respectable 13.8%. But a little off those recent highs. So was doing even better until recently. So even these slow and steady can win the race type stocks are doing well with these conditions. Third quarter core income increased primarily due to lower catastrophe losses. So we haven't had the big fires and the hurricane damage like we saw in 2024, knock on wood, not yet. And so in the third quarter, those expenses were all lower. They described the third quarter as an excellent with strong underwriting results. They do have $100 billion in their investment portfolio. Remember, insurance companies have to keep a lot of cash in reserves to pay out on the claims. So they do invest that money. And over the years, Berkshire Hathaway has had some excellent investors outside of Warren Buffett managing Berkshire's investment in the insurance side with that capital. And that can go a long way as well. But think about that for a moment, that they have $100 billion now just in that investment portfolio. That's pretty big amount of money. And even if just in U.S. Treasuries is generating nice free cash flows, hence the share buybacks. They bought back $628 million in just the third quarter. What do these earnings estimates look like if they've got the Zacks number one rank? How bullish are these analysts? We've got a lot of coverage on the Travelers companies, and 12 are higher in the last month for both this year and next year. Very nice earnings growth. Look at this, 24.74 up from 21.78 this year, and then 26.21 expected for next year. So like I said, it's 14.6% earnings growth for this year for a company that's been around a long time. and then another 5.9% for next year, almost 6%. And we aren't even in that year yet. So things are looking good for travelers companies. Don't rule out these kind of boring types of old economy companies like insurance. This is property and casualty. This is home, auto, business. And so with the right underwriting and the right market conditions, these companies can do quite well. And that's what we're seeing with the travelers companies, ticker TRV, Zacks number 1, and the A for style. Okay, then we're going to wrap it up before I do the gold miner with our third stock. And this is a small cap company too. And it's OPFI, OPFI. I'm always, a little bit, this one shouldn't be hard to talk about on the actual name because it's just OPPFI, OPFI, and they are in finance and they give affordable credit to 48 million Americans who lack traditional options. It's got the number 1 for the Zacks Rank. It's got the A for the VGM. Also has an A for value, an A for growth, and then a B for momentum. So almost A's across the board. Now, what the screen did not screen for, even though we're getting the 1 and the A VGM, is A across all style scores. That's even harder to do because we haven't seen 1 yet in these 3. But they exist out there, but those are even rarer with the number 1s. But we'll just take the A VGM score overall. It's close enough. It's getting us a lot of top rankiness in this type of screen. 877 million on the market cap. And you can see those earnings taking off on this price consensus and surprise chart. It's got a great earnings surprise track record. It keeps beating by big margins. But the shares have been very volatile this year. Hit a new high to start the year, have come way down, but are still up year to date 28%. And off recent highs. So maybe this is a buying opportunity. It's got that A for value because look at this forward P of just 6.4. Because earnings expected to be up 65% this year, but only 8.9% next year. And they have also reported earnings. So this is good. Record quarterly revenue up 13.5%. They did raise their full year guidance. So that's why we've got the Zacks number 1 rank because they raised that guidance on both earnings and revenue. Let's see what's looking like on the earnings. So they gave a guidance range of 154 to 160. We were at 142, so now we're up to 157. So kind of right in the middle there of the range they gave. 2 estimates higher for this year and for next year, analysts raising into next year. And then they revised the revenue growth. I'm scrolling up for this year up to 590 to 605. We're at 597 now. That's revenue growth of 13.6%. And another 9.1 expected for next year. So very solid year over year revenue growth on this small cap. And you are getting it very cheap. Like I said, it's just 6.4 on the PE. Anything under 10 is dirt cheap. And then just looking at some of their other valuations, price to book is 4, so a little higher than I look for, which is 3 and under. Price to sales of 1.5. That's pretty cheap. It's not classic value, but it's down there. So we're going to pay $1.53 for every dollar worth of the sales. So not too bad. But overall, still got the A score for value and it's got that A score for growth because we are getting the double-digit growth. Now, the only thing with these types of like smaller companies that are giving credit to those who otherwise can't get credit is to be on the lookout for non-performing loans, bad loans that are discharged off and look at those charge-offs. Is there a growing number of the charge-offs? And that would be my only concern with a company like this in these market conditions where we're starting to get concerned about the consumer and paying on the auto loans and whatever else is going on, even the payment plans, the Affirm type of companies. Is everybody able to keep up with what is happening on the credit side, or are we going to start to see a lot more of these non-performing loans coming? And so that's something to keep in mind with OPFI and the other companies that are similar in this category. But for now, it's still a number one, and the last quarter looked to be pretty solid, A on the VGM. And so we have the top rank and top style scores. Now, let's take a look at that gold miner. I'm flipping on my pages here. There were 4 gold miners. Not all of them have reported yet. And I just wanted to kind of point out what was going on with their Zacks ranks and style scores as well. So I just chose a random one. Kinross Gold, ticker K as in Kathy, G as in gold, and C, KGC. And it's got the Zacks number one rank, AVGM, but it's got a B for value and A for growth. And this one actually a D for momentum. They are off of their most recent highs. And over the last month, Kinross is down 8.5%, but it was making a 5-year high. As you can see, I brought up the chart. It's kind of crazy how much these gold miners have taken off in the last 2 years, but gold has literally basically almost doubled in that time period. And so the earnings are soaring for these gold miners. And you can see all of the earnings lines on this price consensus and surprise chart are up and to the right, but they're virtually on each other and the chart. So the stock was going up with the earnings estimates. Has this one reported? No, but it's reporting after the bell today as I'm recording this. So by the time you watch this, it will have reported earnings. And so I'll be tuning in to see what all of these gold miners are doing as they roll out their reports. But earnings expected to be up 130% year over year. And we do have someone raising their earnings estimates into this number in the last week, one estimate higher. Let's see if they really push it up. We're expecting $1.57 for the year now versus $1.53 just a week ago. And 90 days ago was $1.36. So as those gold prices continue to rise, so has the full year earnings. Now, remember, third quarter, not as bullish as what it might be for fourth quarter. While there was record gold prices, a lot of the surge in gold over 3,500 happened at the very end of third quarter. So it wasn't able to capture as much of those, say, $4,000 an ounce prices, but it has been here in the fourth quarter. So for now, we're only into the second month. So we'll see if it can hold these levels. Anywhere above 3,700 will be a new record for all of these miners here in the fourth quarter. Great free cash flows. That's why I'm watching all of these. And obviously the analysts can't keep up. So we get the good Zacks rank. We've got the growth, double digits, triple digits in earnings for this year, another double digits expected for next year. With any of these miners, you have to be able to get it out of the ground. So weather, labor, political situations, all of these things come into factors, even the price of energy and getting that impacting how they can get it out of the ground. Right now, energy prices are fairly low. So that's also going to the bottom line with these gold miners. So I'm going to be watching them. But Kinross Gold, KGC, a number one with an A on that VGM score. So you can kind of see these stocks are in all different areas. And I didn't see a single Mag 7 on this list of 17, nor were there any of the like kind of big growthy names like a Palantir on this list either. So it's not that easy to get the Zacks number one rank plus the AVGM score and be at the top of whatever's happening. But I do like to look at these types of screens because it does give us some indication of where are the hot areas in sales and earnings, and where are the analysts kind of behind and not able to keep up with good news happening in that industry. And we see it in the gold, and then in some of these just individual things happening with some of these companies that I talked about today. So buy the good news. You don't have to buy the ones that are beaten down necessarily, and look beyond the Mag 7s and the other hot growthy names, because you might find some hidden gems on a screen like this, or even be introduced to a company who's making a drug product that you didn't even know was on the market. So use these screening tools, use the rank, use the style scores to find a good screen, and then drill down into it to see what's going on with the stocks and the companies behind that screen. That's why I like using the rank and the style scores to find these hidden gems. So let me recap the stock tickers again. We had Indivior. I'm hesitating as I say the name. INDV is the ticker there. The Travelers Companies, ticker T as in Tom, R as in Robert, V as in Victor. We had OPFI, ticker OPFI. That's loaning out to people who otherwise couldn't get loans. And then we talked about one gold miner. Kinross was the one I chose. Kinross Gold, ticker KGC. And as always, you should be subscribing to get all of our podcasts here on the Market Edge. You can get us on Apple. You can get us on Spotify. We're on Amazon Music, and get the video podcast on YouTube. But be sure to get us somewhere, and I'll see you again next week with some more stocks.